It's been a very strong 12 months for Wall Street. The Dow Jones Industrial Average is up by about 1/3 since the same time last year. That's that yellow dot there. Is it Donald Trump's doing, or has he ridden the wave of an uptick in global market sentiment? When Wall Street closed at the weekend, the Dow finished above 26,000 points for only the third time ever.
Investors have elected to ignore the rhetoric and focus on the reality. The reality really has been economic and corporate.
But the recent bull run extends back to 2009, after the global financial crisis, when the Federal Reserve printed money to stimulate the economy. Barack Obama was president at the time.
The stock market went up 130% under Obama. He never really once mentioned or used the rise in the stock market as validating his presidency. It's not what presidents do.
It's what US President Donald Trump does, using Twitter to crow about a string of share market records, such as the stock market at an all-time high. That doesn't just happen. And we have never had 70 Dow records in a one-year period. Wow.
He certainly helped the market rise probably more than it would have had he not been president.
Donald Trump's influence on the US market has been dramatic, rising after his election win. Following inauguration, the market jumped on news of financial deregulation, but the real surge came after he detailed his tax plan, and then again after those plans were passed late last year.
In some states, the middle class will probably be worse off from these tax cuts than they were before. But for big business, for multinationals, for big Wall Street companies, the tax cut was fantastic.
Those tax cuts will likely drive company profits, which is hoped may spill into an economy which is continuing to grow under Trump's leadership.
We've seen the unemployment at 4.1%. Over 200,000 new jobs have been created in the last several months, and that US economy is really striving away.
It's not just the US economy that is growing, though.
We're seeing synchronized growth in the world for the first time since the GFC. That really doesn't have anything to do with the Trump policies.
And while that synchronised growth helped to propel the share markets of most advanced economies last year, Wall Street may face some stumbling blocks ahead.
It'll be very interesting to see what happens in the second half of the year, because we're getting to levels where companies are very highly valued, and we're also going to be seeing a lot of central bank tightening.
The market is perceived as overvalued. So, look, we believe that the market, or the US Fed, will increase interest rates by about 1 or 2 times throughout 2018.
For now, the most immediate concern is how investors will react to the US government shutdown.